Good afternoon and welcome to the Asian Midday Market Watch. It's Friday today, and our guest today is David Kuo, the founder of the Smart Investor out of Singapore. David, as always, on a Friday, great to have you on the show.
Thank you so much. Salamat Tenggahari.
Now, David, before we get your insights as usual, let's first take a look at how crypto markets are performing, and then we'll take a look at how regional stock markets are performing. We'll start with Bitcoin. It's at 40,670.2. It's down 6.79%. Ethereum is at 2,894.48. It's down 5.57%. Looking at regional stock markets, we've got the SGX Straits Times Index, which is at 3,443.06. It's up 0.04%. Across the region, we've got the KLSE, which is at 1,602.85. It's down 0.14%. Now, Shanghai is at 3,468.26. It's up marginally, and well, it's now down again 0.01%. The ASX 200 is at 7,522.3. It's down 0.69%. The Nikkei is at 27,163.5, down 0.25%. The Hang Seng is at 24,698.5. It's down 0.39%. And rounding up the numbers, we've got the Kospi, which is at 2,743.21. It's down 0.03%. David, what's your view on how markets have performed this morning?
Well, the markets here in Asia are relatively muted as compared to the US, which was down roughly about sort of 2% last night. So we saw falls in the Dow, we saw falls in the S&P 500, and also falls in the Nasdaq. So maybe Asia seems to think that the war over in, the possible war over in Europe is so far away that we don't really need to worry too much about what's going on. Whereas the European markets and also the American markets are probably closer to where the possible action could be. All credit to Asian investors thinking that that is somebody else's problem, which is really the way that we should be thinking about this conflict between Ukraine and Russia.
But, David, it's bothering investors, and it's resulted in prices going up from everything from bond prices to stock prices to gold prices to oil prices. So as an ordinary investor in Asia, where should we be putting our money?
Well, you should be putting your money in the best possible assets at the moment. I fully understand why people are very concerned about the war, and consequently, they're shying away from risk assets, namely stocks, and they're going into less risky assets, such as bonds, such as gold, and maybe some of the safer haven currencies like the Japanese yen. I fully understand that, why people want to think like that. But let's not also forget that whilst the conflict between Ukraine and Russia is a danger, is a risk, there is an even bigger risk in the market at the moment, and that is inflation. And if you move out from the risky assets, such as the stocks, and you go into safer assets, such as those currencies that I talked about, how are you going to protect yourself against inflation? And whenever I see situations like this, Brian, I'm always reminded by the fact that the price of a share is a function of two separate components. The first one is the price to earnings ratio, and the second one is the earnings per share that a company is capable of generating. So in other words, there are two very, very different factors. The first one is the performance of the company. The second one is the sentiment of the market. Now, if you have a look at the performance of a company, that is set in stone. I mean, a company's previous earnings per share are stuff that you can actually look at whenever you want. And then you can project what the earnings per share are going to be in the future. That's fine. The price to earnings, however, is driven by sentiment. And there are times when people are very bullish about the market, and so therefore they're willing to pay a high multiple for every dollar of profit that these companies make, in which case it drives the share price higher. But ultimately, what you should be looking at is the earnings per share and say, is this company capable of generating higher and higher profits in the future? If they are, you shouldn't really be sort of coming out of those stocks. And if you do, I think it's a pretty big mistake that you'll be making.
Now, David, so speaking of specific sectors, that may potentially benefit from a inflationary regime, you wouldn't be far wrong if you'd invested you're putting your money in stocks like DBS and Maybank and Public Bank.
Oh, absolutely right. I mean, just look at the profits that these companies have been able to generate. We have to say, first of all, that last year was a kind of an aberration for many of these companies. And it was an aberration in the sense that, yes, the banks were doing okay, but they weren't able to reward shareholders with the dividends that investors like myself wanted. And that was primarily because the regulators had said, you can't pay the dividends to shareholders. You have to hold the cash back just in case, because we don't know what's going to happen in the future. But effectively what's happened is that the banks made provisions for bad debts, and those provisions obviously sort of hit the bottom line. But what we're actually sort of seeing this time is that those provisions have been added back to the profit loss accounts. And when you have a look at DBS, profits up over 30%, UOB up over 40%, and I would expect OCBC to also report pretty good results. And when we hear from the two Malaysian banks that I have interest in, Maybank and Public Bank, I should think those results will be pretty good as well. And I think shareholders will be rewarded, which is really the point behind investing. And that is, you have to be patient, Brian.
And also the other thing that has resonated with me, David, over the 1.5 years you've been on our show, is the fact that you are very much into consumer staples. So in our part of the world, if you look at Bursa Malaysia, Nestle comes to mind, besides the Starbucks and the Unilevers and the Procter and Gamble's as global companies.
Well, yeah, quite right. And, when I saw the results that came out just a couple of days ago from Heineken and then from Carlsberg, I mean, these companies are great companies, and they're able to produce the things that people want. I'm not suggesting everybody go out and have a beer today, but they produce the things that people really enjoy. And that really is the basis behind my investing. You have to be patient. And yeah, the pandemic was a very disruptive influence on these businesses. But when you have a look at these results that will be coming out, when you see the results coming out from Nestle's later on, maybe Ajinomoto, and even companies like Panasonic Malaysia that makes ceiling fans and upright fans for people, you will find that these companies are doing okay. But just because people don't want to buy the shares, it's primarily causing those share prices to be depressed. And I love situations like that because I know the earnings per share is going to be strong. So therefore, if you don't want to buy them, I certainly will be buying them.
Well, I think in this regime, there's a lot of food for thought there.
Oh, absolutely right. And also have a look at British American Tobacco. And by the way, this is not an advertisement for people to go out and smoke, but look at BAT. No, BAT has been affected by black market tobacco in America. And I looked at the results. I looked at what the company had to say, and it was that their performance has improved primarily because of a clampdown on black market tobacco. So there are lots of consumer goods companies in Malaysia, and I would also like to throw in a company, Dutch Lady, which produces milk that people will want to drink on a regular basis. And these are great companies. And they're also expanding their business, expanding the production over in Malaysia. So am I worried? Absolutely not. Ask me how these shares will perform. Well, find out in 5 years' time if they're going to be better than they are today. And the answer probably is going to be yes.
Now, David, as always, thank you very much for taking your time to be on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, the founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. Please like and subscribe to our website, as well as our various platforms. Thank you very much for tuning in.